Take away, please. I want a cappuccino. I'll have.
Hello, everyone. Thank you for joining. We see you joining in. So glad to see you here. Where we ask that you mute, please. You're not a presenter. May you please mute your mic. Please mute your mic if you're not a presenter. And welcome. We'll get started shortly. Hello, hi everyone. Hi Chieta, hi Nyasha, Pamela, Nicole, Zai, Jeff, I see you. The Madinya family. Molly, welcome. We're looking forward to hearing your experience later. Noma Gugudube, we see you. Changarai, Rangagwati, thank you for joining. Okay, it's 5:03 here in Harare. Let's just give others 2 more minutes to join, and then we'll get started right at 5 past. Just a gentle reminder, please mute your mic. If you're not speaking or you're not a presenter, kindly mute your mic. Thank you. Okay, all right. Okay, 5:05 now. All right, thank you for playing the music. Thank you, DJ. One of my favorite artists, Shiwani Sode. Thank you so much. So I think we can get started. It's 5 past, and it looks like we have 36 participants on the Zoom. And I know we're also live on Facebook. So welcome, everyone. This is the Generational World Series that is being hosted by USAP, the United States Achievers Program. And the series came about earlier this year when we had a general wealth building webinar. And I was a panelist on that webinar. And we had an overwhelming positive response when we kind of started to talk about real estate in Zimbabwe. So it's one of the topics that really resonated. So I'm happy to say we're back by popular demand. And hopefully today we'll do a deeper dive into some of the questions that were asked in that first session. Just a recap in the Generational Wealth series, the last session was about Black tax, a very heated discussion on Black tax. And I think, my personal takeaways were just to think about, the concept of Ubuntu around Black tax. And really, I really liked that somebody brought up the idea of well-being. really, how do you feel when you give back, and to think through that and to think what's best for you in each situation, and also to consider the sustainability of your contributions. So I really enjoyed the last session in the Generational Wealth series. Today, our session is titled Real Estate Investments in Zimbabwe. And the idea is to cover real life experiences, the situation on the ground, as much as possible, and not to focus on you can learn yourself or find maybe by Googling or taking a class. We are excited with the two speakers that we have and the others that will share their experience later on. Just some disclaimers. The decision to invest in real estate is a personal choice. It depends on your financial situation, risk tolerance, your goals, your investment style, etc. Real estate is not as liquid as stocks and tends to require more money upfront as well as time, but it does provide a passive income stream that and potential for substantial appreciation. We'll hear more about that from our speakers. And the views that will be presented today are the speakers' views, right? It's based on their own experience and their work, the work that they do. The idea is to give you information that you may find helpful in your own journey. And we'll try to, in fact, we'll shy away from anything political. Just to put that out there. All right, and we see more people are joining. Welcome, welcome. We now have 43 participants on the Zoom. So with that, I really am really excited to introduce these ladies that I have on the panel today. And I do have to do a shout out to an all ladies panel. You will hear from a gentleman later on in the session, but it's special when we have a panel that's a panel of experts that are ladies. I just saying, feeling good about that. So let's get right into it. I'm going to ask my panelists to please introduce themselves, just a short intro, quick facts about who you are and where you sit in this world of real estate investments. I'm going to start with Karen. Karen Nyenga, please introduce yourself. Thank you.
Hi everyone. Thank you so much, Doreen, for this opportunity and inviting me onto this platform. So I'm Karen Nyenga. I'm the licensee and the CEO of Fine and Country Real Estate here in Zimbabwe. The company in itself is part of a global network of over 300 offices globally. So depending on where you are in the world, you probably encounter Fine and Country Real Estate office. And then on another front here in Zimbabwe, I'm also the director of Industry Girls Network, which is a community of women who are in the build industry, whether it's interior decor, architecture, on the services side, and we're a support network. We also then focus on collaborations in terms of property and development and trying to help each other in business. And in general, in terms of real estate experience, I've had now probably combined 15 years of real estate experience, not only in Zimbabwe, so I've got local, regional, and international experience. And I'm still learning because so many things are changing, which is the good part about it. So I'm still learning, but there definitely are a few things that I'd love to be able to share. And this topic is part and parcel of one of my favorite things to talk about.
Thank you, Karen. We'll definitely be tapping into some of that experience that you mentioned, and we're so excited to have you. Thank you for making the time. Tendai, the floor is yours.
Hey, thank you, Doreen. My name is Tendai Manyanda, and Sorry?
We can hear you now. Please proceed.
Hello. Hello?
Yes, Tendai, we can hear you now. Please go ahead.
Okay, great. My name is Tendai Manyanda, and I am the director in charge of legal and compliance at Cardinal Corporation. So Cardinal Corporation is a group of companies that deals mainly with property development. So the listeners would probably know us as Arlington Estate, Peakwood Village, and probably Silverbrook, 100 on Mont. Those are some of our projects. So I have a total of 16 years working experience, 7 of which have been spent in the development sector. And that's where I've mostly grown, and that's where I found my passion to be, actually, in the development of properties. So prior to joining Cardinal Corporation, I worked in the financial institutions. I worked with Genesis Investment Bank. I worked with Renaissance Merchant Bank. And earlier on, I was with Zimra. And, that's where I gained most of my analytical and client relationship skills. I have a degree from the University of Zimbabwe, and as well as a law degree. So that's my economics degree, and as well as a law degree from UNISA. Yeah, that's all about me.
Thank you, Tendi. So participants, as you can see, we have an agent, real estate agent, CEO. She has this build network that she also runs. So we're happy to have her. And then on the other side, we have Tendi, who works for a real estate development company. And she also has financial experience, and that experience from Zimra that I think we'll need to tap into as well as we proceed. So thank you, ladies. I see more people have joined. So just to give a structure of what the session will look like, we're going to get into a fireside chat with these two ladies, Tendi and Karen. We have some questions that we're going to go through, hopefully to give us kind of the lay of the land when it comes to real estate in Zimbabwe. And then we'll open it up to another participant, another panelist who's going to share her experience with constructing actually a house in Zimbabwe. And then we'll open it up for Q&A. So continue to put your questions in the chat. We'll address them in the third leg of the session. And then after that, we'll go back into more life experiences, real life experiences. So just so you know where we are and where we're going, if you need to leave, you can at any point, but those are kind of the 4 parts of our session that we have. So let's jump right into it, ladies. Hope you're as excited as I am. We're going to start with you, Karen. How would you characterize the Zimbabwe real estate market right now?
Okay, so I think a lot of people would actually be a bit shocked if I was to tell you that there are quite a lot of transactions happening at this present moment, believe it or not, or at least in terms of our experience right now. There's a lot of people who are acquiring stands. So we're finding a lot more people are actually probably acquiring property which they can build and construct on their own terms. Mainly because, of course, budgetary constraints or budgetary conditions. And then, of course, in terms of the financing that's available and what people are actually eligible for. And then personal taste. So you'll find that a lot of people would rather actually get into something which they can construct from start, which suits their designs and desires. I've had quite a number of probably commercial acquisitions probably in the last 3 or so months in this period of COVID and all of the other things that are happening. And we're finding that, again, in terms of the whole notion of people wanting to rent, a lot of people are actually moving forward into acquisitions. So it has become a bit of a good market right now. In terms of being a buyer's market or a seller's market, it's sort of like meeting each other halfway, I think. And when we say that it's a buyer's market, that's where the buyers are actually, they're sort of putting in the conditions of purchase. Sellers don't really have that much control in it because there are a lot more options for buyers to come into than when it's just a seller's market where buyers really literally are haggling for properties and stuff like that. So in terms of that, currently, surprisingly enough, I'm finding the market to be quite good.
All right. So what I heard you say is that you feel it's balanced. So do you feel it's balanced between buyers and sellers, both in residential real estate and commercial?
No, not so much in commercial from what I've seen. Like, I mean, obviously there are other aspects that go towards that. I'm finding it more so in terms of activity, mainly into the residential side. In terms of commercial, the deal structures are a bit more complex, of course, and it just depends on what we're looking at. I've seen quite a number of our pension funds moving quite a bit, a number of our banks moving quite a bit, and telco companies. So all those FMCGs, telcos, banks, insurances, and pension funds, I'm finding they're mainly our bigger movers in the commercial realm.
Karen, so let me just go deeper into that. So what are your views on real estate as a wealth building mechanism, right? Because like I said earlier, we're in a generational wealth series. So we're talking about wealth building. And in fact, this morning I was talking to somebody, and I was talking about this session, and they were like, we, and I'm going to generalize a bit, forgive me. We Africans, she said, we, because she's not Zimbabwean, but she is African. She said, we like to see our money. So we like buildings because you can see the money. What are your views on that?
Well, I agree, actually. I actually think a lot of people love to see where their money is at. And you mentioned a lot of other things in terms of the various investment options that are available for people. And the part that I find in terms of the initial part of your question, I think real estate definitely is something that we should at least consider as part of our wealth portfolio or wealth basket in terms of investments. As Africans, we have a whole lot of things because our family is so compounded with a lot of things. We've always got extended family. Can everyone hear me? We've always got family and extended who are still considered as a part of our family unit. And I find that sometimes people tend to stray away from real estate purely because of the perceived notion that it's something that's really, really expensive to come into in the beginning. And we now need to start to consider various ways that we can actually get into the real estate investment into the real estate investment arm. And also thinking beyond just one residence or one property which you live in. A lot of us grew up with parents where the house that we lived in is the same house that you were born, is the same house that all the other siblings are born. And when everyone goes off to university, we come back, everybody comes back to that house. People are married from that house, people die in that house. And then there's like 12, 15, 30 of us trying to inherit from that one estate. Whereby if we see globally, there's a lot of different things that happen when you are moving job to job, you're moving from county, state, and when you move, either you dispose of the property or you rent out another property. And that's the kind of like movement that we should actually try to encourage various people to think that, it's not such a static environment as much as we probably would have been exposed to in the beginning. There's just so many things that are going to change. Your whole family setup is going to change. When you start off as a single person, then you get married, you have children. There are various needs that you are also going to need as your whole demographic or your whole family aspect changes. And then at one point when you were an empty nester, you're going to want to downsize. So even then, pension funds, what's going to happen in terms of the erosion of your funds, if that, is that something you did mention, something that can actually appreciate over time. So what happens to you then? Are you going to be comfortable in retirement age, or are you going to be looked after by other people? So this is the time to start to have those discussions. Definitely, yes, real estate is something that people should consider for generational wealth and as an investment.
Thanks, Karen. A lot to unpack in there, and you actually started to talk about how to get in, right? So we'll talk about that a little later. I want to go to Tendi now. Tendi, what are your views on real estate as a wealth building mechanism? Let's start there. Tendi, please unmute. We can see you speaking, but we can't hear you. There you go.
When you consider, sorry, yeah. Yes, it's going to take me some time to adjust there. When you consider wealth, you're looking at a store of riches, right? You want to store your wealth. You want to store value in the asset that you have. And you want something that also has the potential to produce income, or has the potential to generate income in the future. So, it's so easy to make money. It's so easy to go out there, make a huge deal, and then generate some income. But the key is in how do you store it? right? How do you store that huge sum of money that you've just made? And I feel that investing in real estate is one sure way of securing that investment, of securing the value of that pot of gold that you've just received. It's also not just going to store it. It will most likely generate income in the future, depending on how you use it, like Karen was saying. So I would encourage people, yes, definitely go ahead, invest in property because it will store your wealth. Don't invest in wealth diminishing assets like cars, for instance, expensive clothes, machinery. Well, it depends, but machinery, it depreciates way more than your property would. So consider investing in property. And then the key thing, once you have done that, is to secure it. So like Karen indicated, you will have so many family members that all come in and want to inherit from that one piece of property that exists. So you want to make sure that it's properly registered, probably in a trust vehicle or probably in a company vehicle, but it's all up to you to find what best suits your needs and your requirements and your vision of what your future income generating project will be like. But yes, definitely, there's no other sure way for me anyway than investing in real estate as a store of as a mechanism of building wealth.
Thanks, Tendi. Very convincing, very convincing. So let's talk about returns then, right? Because if I'm going to store it, it better grow. So if I'm going to store a bag of money, I really would love for it to multiply and grow. So what sort of returns are possible with real estate investment options in Zimbabwe? Of course, you can kind of break it down between the different buckets, but just give us some flavor of that.
We are almost there.
May I just remind everyone to please mute? Thank you so much.
Okay, so when you're looking at returns in Zimbabwe, you're looking at your rental income. That's one sure way of earning a return on your investment, or you make a profit if you flip it. So I'll discuss a little bit on rental income. So your rental yields, you're looking at anything between 1% and 12% per annum on your rental yields. 12% you will most likely earn in the smaller gated communities. And I'll explain why. Smaller gated communities, there's a smaller capital outlay, an initial capital outlay when you're investing in those. And those kind of communities are secure, and people find them a lot easier to maintain because the yard is small and you have a property manager who will look after. So you're looking at your cluster developments, at your flats. You will find that those kind of properties you could probably rent out. Karen will correct me here, but you'll probably be able to rent them out. For instance, a 2-bedroom flat, you probably be, depending on its location, at about $500 per month. And then you go at an acre stand somewhere in Maple Rain, and you'll most likely be getting a return of the same amount. But this one is you would have had to outlay a larger amount when you're investing in that property. So I would say your 1 to 5% are in the larger properties because of the large capital outlay, and the demand is low for those kind of properties. So you're looking on average at a 1 to 12% return on investment for properties. But you also need to consider when you're renting out, you need to consider your location. You need to consider your soft amenities like your water, electricity, internet, security. And then you need to vet your tenant to make sure that the gap between your actual versus your potential return is not that wide. And then that's on your rentals. Then you're also looking at your profit, which is another form of return on investment. So when you're considering profit, you're looking at buying a stand, building on it, and then sell it. So when you do that, we find that there's so many people on the market that have that are investing in stands, building them and selling them off as units, as housing units, their return on average is anything between 10 and 30%. So that is significantly higher. Okay. But it all depends on what your intention is, like Karen indicated earlier on. Are you looking to invest so that you can have income, a project that generates income well into the future? Or are you looking to generate money now so that you can flip it and continue to flip and flip and flip? So when you do that, then you get your 20 to 30%. But again, this is also subject to your location. Most people want places that are accessible, close to major roads. They want areas that are easy for them to get to CBD area. So you're looking at your congestion, you're looking at your water, electricity, and also close to amenities like your supermarkets, clinics, and service stations. With that, it becomes so much easier to then achieve that 20 to 30% return. Okay, I hope that answers you, Karen.
Thanks, Tendi. I think it's there's so many nuances to it, like you're starting to point out. But thank you for giving us a flavor of at least you said 1 to about 12%, and then you could get as high as 30%, right, in a flip or an outright sell. So we'll get back to that. Karen, can you just give us a flavor of pricing in different neighborhoods? Maybe you can use certain examples where you're seeing the most activity. Also kind of address both residential and commercial if you can, but just kind of give us a flavor of what that looks like.
All right. So thanks for that question. So the part that in terms of the flavor of pricing with real estate, yes, it's going to be so nuanced. So I may cover certain things and some things may be missed out due to time. However, what I'm finding, and I'm actually really happy is actually happening, is that because there are a lot of newer developments that are coming along, price competitiveness of certain properties is actually now starting to increase. So, initially probably even as far back as 10 years ago, with $35,000 or so, you could only acquire property, maybe a flat or something like that in the CBD. And now you've got options. You've got your high density areas where you've got housing developments that have come up. You've also got medium developments, medium density developments that have come up, whereby with your stand, you can actually acquire a 1,000 square meter stand between 20 to 25,000, and you go along there. So in terms of residential options, that is now starting to widen purely because of the fact that there are a number of developments, such as one that Tendai and them actually manage, which are coming up on the market that give people a massive price option. So beforehand, we were very limited in what we could afford and what we could actually acquire. And now with all of these new developments, the stand sizes are large. 1,000 square meters is a very decent size for residential. Now you're not only then stuck with apartments in the CBD, we can now go out, even to our peripheral areas like your Ruas, your Sandton, your Arlingtons, and all of that away from the CBD, again, decongesting that. And then it gives a person an opportunity to start to buy. A caution that I always like to say to people is, if you are considering real estate as an investment vehicle, always watch that you do not overcapitalize in whatever area that you're going to go into to construct or to buy, flip real estate in. Because if you go in, you buy the stand, or you build the house, and then you end up spending $200,000 in an area, most of the properties are only about $80,000, it really isn't going to make sense for you. If you come into your Marlborough area, just so that at least I can continue forward with what Tendai had actually highlighted before, yes, you've got your acre properties. Those are very attractive to a lot of people. Most of the times I find that those properties in that area for an acre, three bedroom or 4 bedroom, 2 bathroom house, most of those are between 145 to about 165. They're older properties. They're sitting on pre-existing services and developments majority of the time. So for those people who want to go and, spread out and come in at a good entry level price, Marlborough, if you can still find one, is really a good area for those kind of things, even for Greendale as well in some locations. We still have our prime areas, which we call our Golden Triangle, or our northern suburbs, which are our Mount Pleasants, Highlands, Chisholm, Borrowdales, the Colne Valley sections. And those are properties where, you're coming in and you're expecting to pay a premium price for it. So there's quite a plethora of options in terms of real estate pricing in Harare and Zimbabwe, and that's on the residential side even as it is. When it comes now to your commercial, there's been such an increase in terms of business and appetite in our Harare Drive kind of area. So for those who have recently been back, if I'm speaking to the diaspora community, you would have seen quite a lot of activity happening in the Pomona area, and that has changed to a light industrial area. We had known only Masasa, we had known our Granite Side, our Southerton, Willowville areas as our light industrial areas, and now that's coming along in the whole of Harare, So there's a lot of changes that are coming in, which are also affecting our pricing. Something where you would have been paying $60 because of interest, and obviously all the other things that are going around it, it's going up as high as $85, $100 per square meter. And you'll be surprised, people are paying for it because they're actually seeing that this is convenient locality to residential areas. In terms of the stream of traffic, Harare Drive is a thoroughfare into the whole of Harare. So you're going to not have any issues with any of your staff coming to work and stuff like that. And because it sort of amidst the CBD, you don't have any issues with any congestions 9 times out of 10. So there's a lot of factors that are actually affecting our pricing mechanisms, but I think hopefully that gives people a bit of a gauge in terms of pricing in real estate, residential or in our commercial.
That's helpful, Karen. Thank you so much. Of course, so many options and so many considerations, and you need to kind of stay on top of what's happening, right? And I think this is really the big question, the issue of financing, right? So what are the financing options for Zimbabweans in the diaspora, or even at home for some of us who are at home? So perhaps I'll start with you, Karen. You've given us kind of an overview of pricing and locations and what to think about and the changes that are happening in the market. But what sort of financing options are available?
Okay, so this is a very interesting topic. When it comes to this, I'm going to stay away from names, but there are banks that are offering diaspora financing options. They are definitely, that is definitely possible. In terms of their conditions, so you're going to have to now start to ask in terms of interest, payback periods, all of those things, which is normal for any financing. You definitely have to have a one-on-one with them. And this is also for local guys who are around in Zimbabwe. So you can get it either in RTGS or you can get it in the Nostro US dollar. That financing option is available. So people can discuss with their financiers or with their bankers as to what they're eligible for. Those are definitely available. And the joy is some other developers actually can afford to offer a loan book, so to speak. So it may not necessarily be direct financing. It may be your terms to actually acquire your property. So it's not necessarily 100% cash outlay of 30,000 or 35,000. You'll probably be given a finance option, which is 10% deposit or 25% deposit and the balance over 18 months or 24 months. That in itself is a financing option because it gives you an opportunity to control the movement of your money in a sense. There are micro lenders, which I would be hesitant to actually say to people go through because obviously the interest rates are a lot higher and the payback period is a lot shorter. What I've had with a lot of other people who are outside of Zimbabwe is they've actually approached, and look, again, this is my own opinion and something that other people have done, so please do not run around and say this is fact. They've actually approached financiers in their home country of residence, and they're eligible for a personal loan, so to speak. So the interest rates there may be a bit more favorable to what are currently being offered here in Zimbabwe. And it's a bit more affordable because it is something that's relevant to their economic situation and it goes according to their purse. So we'll find a person may get a personal loan in the country that they're resident in and then utilize those funds to either invest in property, to acquire, to build, and they can pay back at a longer tenure and a lower interest rate. So there are quite a lot of various financing mechanisms that people can actually engage into locally as well as on an international scale.
Thanks, Karen. I may come back to you, but Tendi, I know your company is working on an innovative financing product. I think it's strictly for the diaspora, if I remember correctly, and it sounds a bit more secure. Can you tell us a little bit about your specific products that you're offering?
Okay, so we're so excited. Hey, we have this new product that is targeting the diaspora client. We decided to meet our client right at their need. And we realized that our client is mostly concerned about the changes that happen within our economy. Whenever they fund us, whenever they send money to us, will they be able to get their money back in the event that something goes wrong? Because the diaspora client, you have to keep in mind that they're so far away and they are concerned about whether if something goes wrong within the economy or with the company itself, being us, if they'll be able to get their monies back in the currency that they paid us in. We have that project. We have that product that makes sure that they feel secure. It is something that we're looking to launch very soon. Definitely, I'm sure before the end of the year, and hopefully within the next 3 or so months, it should be available for our clients. It will offer them, contrary to what is mostly in the market, like Karen indicated, this will offer our clientele up to 5 years to pay. And the interest rate will be significantly lower than what most financial institutions are offering at the moment. So it will be like you're buying directly from us. You have that security that whatever happens, you will earn your money, you will get your money back if in the event in the unlikely event that something goes wrong. And you also will have a variety of products to choose from, because we have your freehold title, we also have your sectional title. Unfortunately, I can't get into the specifics as yet because it's still something that we're working on, but it has all the Reserve Bank approvals in place, and which is what most people are concerned about when it comes to getting their refunds back. But yes, quite exciting for us. It will be available for all our Arlington stands, all our Silverbrook, which is in Rua, as well as Peakwood Village, which is in Greendale.
All right, so I guess what I'm getting from this is, like Karen said, we have the commercial banks in Zimbabwe do have financing options for the diaspora. If you just do some searches on their websites, I know a lot of them do have that option. The terms may be, a shorter tenure and high interest rates, but the option is there, and then you can pick and choose what you want to go with. And then on the other side, we have the developers themselves coming up with financing options that may be a bit more friendly, but limited to specific areas and developments and locations. So the options are there. I know that this is a question that already has been raised in the chat. If there are follow-up questions to that, please put them in the chat and then we'll come back to that specific question. But Tendi, you started to talk about this, right? So how secure are real estate investments in Zimbabwe? You hear a lot of different things, especially if you're in the diaspora, you're not on the ground. And it's a question that really I have to ask. How secure are they? The regulations, things changing. Please tell us what you think.
Okay. I believe real estate investments in Zimbabwe are very secure. I know you're going to laugh, Doreen. I think they're very, very secure. And that's contrary to popular belief. Look, people will hear about the communal lands, right? Communal areas, that is state land. You can get your 99-year lease on that land and you will get a certificate of no present interest. Yes, it's exactly what it says it is. It's a certificate of no present interest. So that means, later on down the line, the state could come back to you and say, look, we've thought about it and we think your piece of land looks very nice and, juicy, and we now want it. So that is with your commercial land, with your communal land, which is your rural land. But when you're looking at your urban areas, you have your ownership rights, you have title, and that is a real right. It does not get more secure than that. So I am convinced that real estate investments are very secure in Zimbabwe.
Okay, all right, Tendi. Very, very optimistic there. But so what do you say to people who, there's in fact a specific question around this, right? So I've been seeing some developments being graded down by the government recently. Reason being they had been developed in an area that's not approved. What advice do you have for potential buyers to avoid situations like that? How can people feel safe in an environment like demolitions, the whole thing? Tell us a bit more.
Okay, so if you're going to invest in property, for most of us, investing in an asset as large as real estate, that will most likely be your single most important investment. So if you're going to outlay such a large sum of money, why would you part with it without carrying out a due diligence? I cannot overemphasize how important it is to carry out a due diligence before you invest in your property. So, part of the background checks that you need to do is go visit the developer. Your real estate agent will sell you the property and they'll tell you all about it, right? But then if they don't have all the information that you need, there's nothing stopping you from actually walking up to the developer and saying, look, I understand you're selling this through this agent. I just need confirmation of the following. And the things that you need to ask for are, one, so I'll start from the property development perspective. Ask to see the parent title deed. Okay? So the parent title deed is the main deed that says this developer owns this whole chunk of land. And then that developer would have then got to the to the city council and got a subdivision permit that then subdivides it into tiny little stands that are available, that are then sold to the market. So ask for the parent deed, ask for the subdivision permit, ask for the master plan, which is the plan that comes out of the Surveyor General's office. So it has to be stamped, must have the Surveyor General's signature on it. And then get the dispensation certificate that says your stand is stand 2131 and it's this many square centimeters. Yes. So you should be able to, meters squared. So you should be able to see all that, as well as the EMA certificate. If you ask a developer for these things, so it's a parent deed, master plan, dispensation certificate, subdivision permit, and compliance certificate, right? I'd forgotten the compliance certificate, which is very, very key, and an EMA certificate. If you ask for a developer, if you ask to see this from a developer, and they start to, skate around and say, yeah, no, definitely we have that in place. No, don't even worry. We're showing you the diagram. Here it is. All that is in place. Your red flags should go up immediately because those are public documents. If they don't want to show you at the offices, you can just walk up into any City of Harare office, Surveyor General's office, EMA. You can go and ask to see those things. So if you find yourself parting with $50,000 before you've asked for these things, then I really can't help you if your house is razed to the ground. And then if you're buying from a seller who is selling a house that has already been subdivided, so you're looking at your already developed areas like your Greendale, your Borrowdale and whatnot, you're asking to see their title deed. That title deed should be in their name. If that person is telling you, I am selling my property, it should show on the title deed that their name and their ID number is there on the title deed. And even after you have seen the title deed, so that is not foolproof, you still need to go to the deeds office and do a deed search. So with all these documents that I have mentioned, it's still in your best interest to go to the issuing office to verify that that document is legit before you part with your monies. So, you mentioned the demolitions. Those demolitions are happening in areas where people built where the developer did not have authority to develop in that area, something that you could have picked up from the lack of the subdivision permit or from the lack of compliance. So it's not like city of Harare is just going around deciding that, this area we previously had decided that is for residential purposes, and now we've decided that we like it nice and flat. So let's, raise down people's houses. It's areas that people went into, build units on, and yet the master plan, the city, the local plan probably had reserved it for light industrial areas, and now there are homes there. So just do your due diligence, and trust me, your house will not be razed to the ground.
Thank you, Tendi. So, you mentioned the deeds office. I've been there myself. And I think when we started this session, we did say that real estate investment takes time, right? Of course, capital outlay up front, but time. And that's some of the time, right? That to do the right DD before you even get into investing. The problem is sometimes you're not here and you're sending people to do it for you, etc. But you really have to be on it. So I guess what I'm hearing you say is if you've asked for all these documents and you've verified that everything checks out, you do have some recourse. You have something to fall back on. Karen, I'm curious, because I saw you nodding, smiling, all of the above. I'm curious if you have anything to add on this issue of how secure are real estate investments in Zimbabwe.
It's a question that we obviously encounter as agents, being in direct communication with buyers on a daily basis. And, sometimes I hear a lot of my international buyers calling me and saying, and I'm going to switch between Shona and English. Takanzo Kunema stands. We've heard there's this new development that's coming up. And people talk. And the majority of the time, I find that people are chasing the least expensive, the cheapest stands going in. Now you have to understand that all the things that Tendai has actually mentioned, as a developer, there's a cost implication to it, to the developer themselves. So, and also the time that it takes, to be honest with you, by the time that as a developer, you have managed to get your permits, everything to go through EMA, all of those departments, it is a very strenuous process for them to actually go through that. So that should also give buyers or people who are interested in investing in a property, when you're asking for those documents, trust me, anybody who's really on top of things would be very happy to show you, because it takes time. It's not something that's a very simple thing. It goes beyond just, getting these subdivisions approved. Of course, it has to sort of work into the densification of an area. Sometimes some permits are actually never approved, irrespective of the fact that the land is there, because obviously maybe the water may not really, the water, the roads network, and all of these other things. If the developer cannot prove that their development is going to actually be able to sustain itself, it may not actually be approved, or it may be made smaller. So, sometimes the stands that people are running towards, $3,000 stands, and you hear all of these various things, and you're running there and you're thinking it's only $3,000. By the time that you've built, it's $30-something thousand that you have lost, because you've bought the land and you've also started to build. So we have a lot of people who inquire in that. There are also some developers who are not necessarily well-funded. So they may have put some, they've made some ground in terms of getting all of their permits in order, but they may need, to be honest with you, to sell some stands off plan. And sometimes you'll find discounted stands in the beginning. And that's what they need to get along to open roads and whatever. So there are a lot of various things that happen. But again, exactly as what Tendai mentioned, your due diligence, just do your due diligence, not only on the development in itself, but also on the developer, because there should be a company that's registered, that have got all of their paperwork submitted to the necessary departments. And you should also feel some form of confidence. Sometimes it's a new development that they're doing. And there's a lot of young guys that are coming into this early, later on in stages. And it may be their first development, but also feel confident and understand what your recourse is, especially if there's something that should go wrong. What would happen should it be that at some particular point, compliance is not being issued, or, how long it's taking until you're able to get a permit to be able to start to build, and all of these various things. Try to get a copy of the agreement in itself when you're discussing whether you're dealing directly with the developer or you're dealing with an agent. Try to see exactly what the agreement of sale actually entails, so that you know what happens in a default situation, where they default or if you should default. There's a lot of various things that can actually happen in this aspect. So yeah, regarding the raising of properties, yes, it is happening. And, in some areas it is necessary for security and all that, the issues, but to stop all of that kind of stuff, people don't try to always chase the cheaper option, and do definitely put in the legwork. If you're not in Zimbabwe, I always ask, do you have a proxy, somebody who's trusted, whether it's a family friend or a personal friend or a relative, a business colleague whose voice is somebody that you really trust. People say, no, as an agent, just go there, take pictures or do a video call. I, as an agent, personally refuse to take that kind of responsibility, because how do you as a buyer actually know that I haven't just gone to stand under a random tree and then just said, well, this is your stand? You need somebody who's going to say, I've actually physically visited the development, physically visited the house. And then not only that, I've gone through the paperwork that they've provided. Of course, everybody would say, from what I have seen, it seems like it's all on point. And then therefore you can then make your decisions. Don't be so ready to part with money without actually having done that kind of check.
Thank you, Karen. Thanks, Tendai. I think, the truth of the matter is, like you've both said, scammers are out there. There are people who want to take shortcuts because the process is cumbersome. And so, but if you are the buyer, then don't take a shortcut. Go through all the things and make sure that they check out. So thank you for that. And I'm going to just pose a final question to you before I invite somebody to share their personal experience. We mentioned this earlier a little bit. What are the considerations of investing in urban versus more communal areas? Tendi, I know you're super passionate about this, so let me start with Karen and then come to Tendi.
Oh, I actually talked about this earlier on a radio show this week. So obviously with urban, there's a lot of different things, which Tendi also did highlight regarding your sectional title, regarding your freehold title kind of thing. That's land, that's urban, that we know that we can have actual deeds in terms of ownership and stuff like that. Considerations in that is know what you're buying. Know what documentation goes to what property. And 9 times out of 10, there are ways that you can check that, with going to the right offices, as we have discussed, that you can check the legitimacy of this acquisition. There are properties that are closer to the peripheries of town. So there are changes that are happening in terms of expansion and stuff like that. So what used to be a farm, maybe close by, has now managed to get permits and permission to start to develop into becoming another suburb altogether. So it's not necessarily a static thing. Like I said, there's so many changes that are happening. So what could have been communal, so to speak, may have managed to get the permits, whether it is council or it is a private developer, such that they can extend out. And then that means that you will be entitled to get, in Zimbabwe, most of the time it is freehold or sectional title if you're coming into a block. So it's price points for me in terms of separation for urban and the type of ownership that you're going to get into. Communal areas, my main thing is that it is state land 9 times out of 10. So I advise, the legal thing is really, it shouldn't be sold, guys. And if we're talking about the kumushas, it shouldn't be sold. So there's a lot of, we've seen a lot of places that are still termed as communal, and people have been buying in those areas and developing urban properties and urban structures in those areas. So it's something whereby at the end of the day, you're putting in your 30,000. What's the value of your property in a state where you don't have deed and you don't have actual ownership in that aspect? There's a separation, what I've said, there is your kumushas, your communal areas, and then there's certain peri-urban areas which are being converted to residential use. So in terms of that, there has been permission for those particular sections to actually have ownership. As individual ownership, to me as Karen Nyenga. So if you go there, Kunanwa communal areas, you are under Sabuku, you're under something else in that particular thing, but it's not necessarily something where you can go and take that to the bank and say, this is my property, please can you loan me money against this? Those are my issues that I think people should actually take into consideration. There's absolutely nothing wrong with if you guys as a family have got a family homestead and you decide to build something because it's of value to you, and that's something that only you guys know. So you're going to build your residence to something that you're acquired, you've got a certain acquired taste for wherever you've been living, and now you want to take yourself to the country. You want your solar, you want your water, you want your power, your internet, you want to ensure that the pigs have got warm stables, whichever way you want to have it. You will develop it according to how you want to do it. There's absolutely nothing wrong with that. There's value to it for you guys, and you will make that a financial investment without any issues. But where it comes to people then just saying, look, there's 200 square meters being sold in ABC communal rural areas, and it's going at 1,500, let me go there and then, build my house for 12,000 and expect that to have value. There's a risk to that because sometimes, it's not necessarily as straightforward as it should be.
Thanks, Karen. Tendi, what are your views on that?
I am going to invest in my rural Kumusha areas. I am going to build my mansion in my Kumusha. I'll tell you why. Like Karen indicated, it's something that you consider because when you're looking at your long-term plan, where you eventually want to settle down and, you're getting away from the fast-paced life. So your communal areas, it is kind of state land. You really can't, like she said, there's no title deed. Your sabuku, you're recorded in a book by the sabuku that says this is your area, and then you start paying, the admin charges, I think, the fees, if whatever project that they have running, if they want to build a clinic or whatnot, then you're paying your monthly subscriptions to the sabuku. But that land is essentially for you and your descendants. So we're looking at Kumusha, where we got from, Ana, Sekuru, Nana, Mbuya, where you come from. Your bloodline has been on that land for the past donkey years. So you get a little bit sense of security from that line of thought. And with that line of thought, that is why I feel pretty confident that if I build my mansion there and make it Trinidad home, like Karen said, at night, I nothing is going to nothing is going to just disrupt my way of life. So when you're considering such things, you want to look at the cost of developing that area will most likely be small because there are little to no regulations. You can go Pachuru and dig up your own bricks, burn them in a furnace, and then your mansion is up and it's looking all snazzy and all. As opposed to in the urban areas, you can't use your farm brick here. You have to buy that brick from the brick manufacturing companies, and then there has to be some piping that goes this way and that way so that there's proper disposal of sewer, those kind of things. And then with urban areas, you're also considering how close it is to amenities as well as your return on investment. But with Kumusha, you're looking at options like after you've built your mansion out there in the Bundu, you have all these huge tracts of land that you can invest in for whatever farming project that you're interested in, or if it's not necessarily that you want to get into commercial farming, you can make yourself self-sustaining in that area. So, I'm definitely, in a couple of years, I will be welcoming you all to my mansion.
All right, got it. So I guess what I heard you say is that perhaps building or investing in the communal areas may not give you the return that we were talking about earlier, right? It's not the same kind of return where you can flip, sell outright, etc. Yeah. But there's some other good feels that may come from that. And also it depends, I guess, because there are certain communal areas that are closer to the city, closer to the urban areas that people are actually using for Airbnb for those that want a different experience. So I guess it depends on really what you put in, and will it attract something like an Airbnb for you to earn income, right? Thank you so much, ladies. I'm going to give you a break right? You're going to, you can, please stick around because there are questions that we need to go through, but I'm going to give you a break now for you, just a 5-minute break. And I'm going to invite Tsitsi Chimanda, who's a friend of mine here in Harare. And as I was preparing for this session, I was like, oh, she needs to come and speak, because every time I talk to her, she's sharing how her building project is going. She was able to get a mortgage, and now she's constructed a house. So I just thought some people may benefit from that buy versus build decision that she made, but also she has some views, strong views about how to go about investing in real estate in Zimbabwe. So Tsitsi, I see you're on. Welcome. I'm going to give you 5 minutes to give us some nuggets, tell us about your experience, what you learned, and what you can leave with the participants today. And then we'll come back to Tendi and Karen, and Tsitsi, you'll be around as well to answer questions that people may have. I've seen a few in the chat. If you still have questions, please put them in, type them out, and then we'll come to them in 5 minutes. Welcome, Tsitsi. Good to see you.
Thanks, Doreen. Okay, hello everyone. I was told I had 3 minutes to speak. So in my other life, my name is actually Molly Chimanda, and I am a media development consultant. I'm going to speak about how I went about purchasing my property and what I wish I had known and what I learned through the process. So I bought and own a house in Budiriro, which is more or less medium high density. And as a process, CABS had a mortgage scheme. I've always been a client with CABS. And so when they introduced this mortgage scheme in 2017, we went there, we went to see the houses. I thought it was something that I could afford and probably pay off in 2 to 3 years. I applied for the mortgage and I got one for with a 10-year tenure. And when the whole process was associated with, apart from, because there were core houses that had already been built, I bought a core house. It was 3 rooms with a slab, and then had to start thinking about getting an architect to draw a plan, getting all of the approvals from council, the costs that were associated with that as well. And what I wish I had known is, first and foremost, how expensive the whole process would be. So we were lucky, or at least I think I was lucky in the sense that when we got our mortgages, I bought a house that was around $27,000 US. And then Zimbabwe happened, and next thing it was 1:1 US dollar and bond. And so I paid off the house as quickly as I could, and ended up buying the house over 2 years instead of the 10 that I had been given as tenure. But then the building process is something that is completely different, because no one wants to be paid in bond, especially if they are contractors. My builder, they will not be paid in bond. They want their money in US dollars. When you go into shops sometimes and you're trying to buy everything for construction, sometimes you find that the US dollar price is actually much better than the bond price, because everyone is trying to hedge themselves against inflation. And so give and take so far, and as far as the project is concerned, I've spent plus or minus $30,000 just to build the house. So I could have bought it for less, but I've spent quite a bit in also building and constructing the property. What's important is also to do research on the area. Like Tendai said, a lot of issues around access, around internet connectivity, power supply, and so on and so forth. But the other thing is also from a practical point of view, the geography of the area. I will tell you that, for example, I've had 3 different types of borehole siting consultants going to my property to see if I can get water, and I can't. And council water doesn't come out, and it's been 4 years. So also having to make the decision to say, I can't drill a borehole, so this means I'm going to have to buy water for the entirety of my life until council decides that their water is going to be accessible, is something that you have to take into consideration. And I also had to be practical. So practicality when it comes to building, I know we want to stay in mansions, we want big properties and so on and so forth, but it doesn't matter. Like, just be practical when you're building a house. Do something that is usable, something that is functional. when making a decision to get the plan drawn to actually construct the house. And then what I think about real estate in Zimbabwe, it's a good opportunity if you have the financing for it. It's generally expensive. So even if you do get a break and do get a property at a cheap price, the building process is not going to be cheap. And there are chances that you might make a profit or a loss, depending on what you say you want to use the property for. So if you want to use it as an investment property, like Tendai said, the yields are between 1% to 12%. Or if you just want to build so that you can sell the property, then that's also something that you have to put into consideration. Again, because of our economy, having a house or a property is good in terms of capital preservation. Our economy is not the best, but one thing that you do have to know, apart from the process of due diligence that everyone is speaking to, is information around what the banks actually need. So a lot of paperwork is required, and your paperwork really has to be in order. You need to have good guarantors. You need to show your proof of income. You need to prove to the bank that you can actually pay off the amount of money that they say they are lending to you at the rate at which they say they are lending to you, and that you can pay it back within the time that they have said that they're giving you that money. And your accounts have to be in order, because things like bank statements are things that they're going to ask about. And so these are also things that you just have to take into consideration as well. Given another life, I probably would buy a house that is already built, which has got, without all of these other problems about thinking about water and electricity and so on and so forth. But this is where I am. And so I've decided to embrace the process and to actually deal with it in the best way that I can. So yeah, I think that's most of what I can say for now. I'll answer any questions when and if they do come up.
Thank you so much, Molly. Thank you for sharing your experience. I mean, learning from experience is really the best, and thank you for that. And that water issue, thank you for bringing that up, because I don't think it had come up earlier. So the idea of not having, no water through a borehole and no council water, which means that you have to be buying water for use every day, right? So, okay. Thank you. Can't thank you enough. And I'm sure we'll have questions for you. So thanks everyone for sticking around until now. I'm just going to go through the questions that are in the chat for Karen and Tendai, and I may direct some to Molly as well. Some of them have already been answered. Let's see. To rent or buy if you have to borrow from a local bank. Okay, so the idea of, we always hear, if you're renting, why are you giving your money to the landlord? Just, buy your own house, etc. So are there any thoughts around that? To rent or buy if you have to borrow from a local bank? Karen, can I come to you?
Okay, so this is actually, I get this question sort of in a different way. Can I answer it first of all in the way that it actually gets presented to me most of the times? We get a lot of people who want to look into a rent to buy situation or a rent to buy model, whereby they will pay a certain deposit, and then the rest in terms of their rental payments, they're buying, they're paying off on their premium in terms of the property acquisition. There are not a lot of properties that are available that are completed right now in that particular presentation to the market. But if you're looking at the fact that if you've got a mortgage directly from the bank, it is, so to speak, a rent to buy, because now you're just dealing with the financial institution, so to speak. I think if you're going to be dealing with the bank, it's probably better that you're looking at an acquisition straight out. Either, depending again on where you are, it's probably better again for you to ensure that it is a property whereby you can cover the repayments If you're not in Zimbabwe, it's something where then you're looking to see, as initially intimated by Tsitsi, that the return potentially is going to overweigh your paybacks. You know what I'm trying to say? So you shouldn't be sitting there worried about the fact that you have to put an additional £300 or $300 every single month to pay back your repayments in case you have an issue with the tenant and stuff like that. But I think hopefully, if I'm understanding the question, if you're going to get finance from the bank to acquire a property, it's okay for you to put it into the rental market, but ensure that the rental returns are actually exceeding the payments, or at least that you're able to cover it should there be a gap. If you're a person who's local and you need to actually stay in the residence in its own self, ensure that you're able to pay back. That's the only current thing that has got a rent to buy option, so to speak, right now, is if you're financed to actually acquire a property. And when you're in that particular property, your paybacks are your rental, so to speak. But there aren't any models like I see a lot in the UK and stuff like that, where it's a buy-to-let kind of situation for yourself as an individual. There are not that many currently, but it wouldn't be a bad thing. So we're hoping that a lot of people who are in development, or even guys who are in the diaspora, can consider to bring those kind of models if they've got crowdfunding situations that they've got. That would be a good thing to actually bring into them to the Zim market. We're not recreating the wheel, but we're reinventing it for this part, for this side of the world.
Thanks, Karen. And you started to talk about rent to buy. There was actually a question on that, and I was just going to share my experience. I think the good thing about the other side of the coin is that if you have an economy like Zimbabwe, you can really, anything goes. I'm going to say that loosely, don't quote me. But I was able to negotiate a rent to buy option on a commercial property, actually. And it was really about what the seller wanted. What the seller was comfortable with, what I was comfortable with. I put it out there as an option and they agreed, so I tried, they agreed. I was like, okay, let's go. So basically the process is, or the structure is, my rent is in RTGS. So it's really just a token. And then I am paying US dollar installments towards purchasing the property, right? Just as an agreement. Of course, there's an agent that's involved and all the paperwork to do with that, and we have an agreed time, end time for those installments. But it's a commercial property, and I was able to get into a rent to buy just by talking to the seller. So you can ask. I think you can bring any models you've seen. Really, you can put it on the table and see if it's accepted or not in your negotiation. Yes, did I hear? Okay, let me move on. Do we have information on areas like Nyanga and Victoria Falls? That's a question. Tendi, can I come to you on that? Do we have any information on areas like Nyanga and Victoria Falls, or similar, I guess, places that attract tourists or holiday vacationing people?
Great. I think Karen will probably be best suited to answer that question.
Sorry, please go ahead.
Karen, would you like to come in on that question?
Yeah, no, that's fine. There are properties that are available. Obviously, there are some developments that are actually happening in most of these tourist areas. Some things that you have to consider, of course, of late, especially for Vic Falls, there's been so much development, not only on the tourism side in terms of most of, there's a number of, I think probably in the last 4 or 5 years, there's been such significant amount of money that has been put into renovations of a lot of the existing hotels. They've also been about 3 or 4 that have been constructed, or at least have started from fresh, like probably a residential premises that has been converted. So the options are actually there. One thing that people need to also understand is that predominantly Victoria Falls is a national park. So with some of the areas that are available, which are within the precinct of Victoria Falls, where obviously everything kind of happens, you are acquiring probably 9 times out of 10 initially, if it doesn't have a title deed, you're acquiring from the council of Victoria Falls and themselves, and their agreements of sale probably give you a session. Now, I did see somebody actually ask about sessions before. If you're getting a session agreement of sale with the council, local authority, or with the developer, this means that the deed isn't actually ready as yet, and there's certain conditions that need to actually be fulfilled for that title deed to actually come about. When you're dealing with the local authority, such as the Vic Falls local authority, they may require for you to build something, whether it is the slab or a perimeter wall, or to complete building your particular premises for you to actually get that particular title deed. But again, read the agreement of sale, or at least understand the conditions of engagement prior to you actually making a payment. The number of people in Victoria Falls as well, there are some older neighborhoods which are well established. And obviously, because of the activities that's been going on, prices have definitely gone up. So you'll find where land everywhere else will probably be sitting there saying, for that kind of a stand, it may be arguably understandable to say that, you know, between $25 to $30, $40, you may even get to a point where you can see that the land is about $70 a square meter. That's because there's been a huge interest in that particular shift of areas and stuff like that with Victoria Falls. The fact that there's a US dollar stock exchange and stuff like that, and we're seeing everything happening, and it seems to be a massive EPZ, you know, that makes Vic Falls a very attractive place, and it's a thoroughfare going into other countries. So, you know, you have to see those kind of things to see that they're, in terms of price, you know, it is definitely going to shoot up as an investment or as something that you're going to want to inquire into. Buying in Inyanga, again, there's nothing wrong with that. There are places that are coming up in terms of newer developments. We found that a lot of people who have been coming out that side are now being pushed. Obviously, a lot of people are looking at these private hotels or private Airbnbs and stuff. There's quite a lot of places that you can look at. I mean, if you look in the John Galt area, in the Nyanga area, you'll probably find 4 hectares of land, and that's about $50,000, $60,000. So that's not a bad price at all. But then, of course, there are other cost annotations to it. And when you're looking at building and stuff, you're all the way out there. So the cost of construction will probably be increased purely because of the distance that things need to be transported to a certain area. And if you're not in Zimbabwe, how's it going to be monitored? Who's going to be staying on that side? There's a lot of various options that are available to buy, whether it's in Mutare, whether it's in Vic Falls. Again, it just depends on what it is that you are looking to do. If it is for you to utilize only on holidays and stuff, does the investment actually equate what you're going to be utilizing it for at the end of the day? There are a number of developers who are going into, I think, actually, Tendi, you should have actually spoken about this one. I know that there's a development that they're going to potentially be doing out in Vic Falls. There are developments that are coming up that way, whether they're going to be holiday lets or they're going to be, you know, something where people can actually stay there full time. That was one of the issues that I found predominantly for Victoria Falls, was that there's a lot of premises where it comes to coming in to stay for a week or two and have a holiday. But we found that a lot of the staff in those hotels didn't actually have places that were of good standard to actually stay in. So around with quite a few of the developments that are coming up, that means they probably will now start becoming a bit more common to have a good area as a rental, long-term rental accommodation avenue. So I hope that covers that there are potential areas, whether they're new developments or they're places where you can actually build on your own in terms of something that's on the outskirts, such as Nyanga.
Thanks, Karen. And I have to do shout out to Nyanga, my new home. There are also a lot of places that are fixer-upper style. So a lot of old houses of people looking to move for whatever reason, but that would be an outright US dollar purchase. So you can look into that. You can find them on the different websites. We have 10 minutes to the end. So let's see what questions haven't we answered here. There's a very specific question that says, how long should it take for a certificate of NPI to come out after application, and what can be done if it's taking an inordinately long time, i.e. more than 9 months in a particular case? Certificate of NPI. I don't know if I missed what that means earlier. Ladies, is this something we want to take, or do you want to get back to this participant later? Certificate of NPI. Or what is it even?
I'm guessing it's a certificate of no present interest. Karen, do you know about those? I would want to get back to the client.
Yeah, so the certificate of no present interest, ordinarily you get that when you're looking at your farms, which has got title deed, and you would apply through the Ministry of Lands to actually get this. These are usually valid for a year. So I find a lot of people who are looking to sell, they go through and they renew them around September, October, and then it's valid for another year. And this basically would be something that they get from the government to indicate that the government at that particular point in time, which is why it's only 12 months, it's only valid for 12 months, has got no intention of developing in that particular area. Remember, we're talking about a lot of the issues that we have with farms is that ideally, you know, it's state land, so to speak, in as much as we still have got title deed in certain areas, the government still may come through and look at ways to actually acquire it, and they pay the owner of that particular land according to their pricing. So when a person is looking to dispose of a farm, they would ordinarily go through to the Ministry of Lands or at least their rural district council area, who will then take forward the paperwork through to the Ministry of Lands, just to inquire if there is no government interest or intent in moving any development in terms of residential development towards that particular area. That's sort of like the long and short of it. In terms of time frame for that to actually occur, you know, it could be anything, 2 weeks to a month, depending obviously on the current efficiency of that particular office that you're dealing with. If you're really looking that you're dealing with somebody who are more so in the rural outskirts, it depends how well they communicate with the Harare offices and stuff like that. But I'll just say anything from 2 weeks to a month. But now just give everything another additional 2 weeks. So it could take 6 weeks, depending on the distance. Hopefully that helps.
Thank you, Karen. I'm looking at the time. I'm going to take 2 more questions. And I think there's one about, do you think Zimbabwe, and I think these are related, do you think Zimbabwe will adopt the prefabricated houses system as a cheaper and more mobile housing solution, e.g. for tourism or even long-term accommodation? And I think it's related to houses made of containers. You know, we've seen this trend of container houses, and if you follow them on Instagram, they're really lovely. You're like, okay, I would live here. So what's going on in terms of forward-looking, the future, container houses? What do you ladies think?
So I'll tell you what, for our development, we actually, one of our upcoming developments, we are actually looking at building a cottage that is prefab. And that will speak to that question whereby a person was asking about, you know, whether you should buy, after getting a mortgage, whether you would buy or rent. You know, with in such a scenario, you then get the opportunity to get into a low-cost house and be able to still pay off your mortgage facility. But yes, I think Zimbabwe is definitely moving in that direction. The low-cost housing made out of prefabricated materials is something that speaks directly to the clientele, which is the majority of the people that are looking to invest in Zimbabwe. There is not much money floating around in our economy. So you will have people who will appreciate, and you, if you were to see an office that is prefab, most of the time, unless if it's container and that, you know, you can see the steel frame, most of the time you really can't tell that this is prefab. So with prefab, it's not just your containers, it's also your Durawall material. Okay, there are those Durawalls that have the nice designs that look like bricks. Those are also considered prefab. And if they're built nicely and finished nicely, you cannot tell the difference. Our offices, actually, one of the huge buildings at our head office is made out of prefabricated material, and people can hardly tell. The moment you tell them, they're blown away. So yes, definitely we are moving in that direction. I don't know what you think, Karen.
Look, I'm all for it. You see, the wonderful thing about Zimbabwe is even if we look at it as an argument to our Standards Association, because that was probably one of the sticking points is, is it going to be safe? Is it something that's conducive for our environment? Is, very rarely do we get most of those things that affect the other world in terms of floods. A lot, I mean, of course it happens, but in terms of floods, in terms of high wind, in terms of extreme temperatures and stuff like that, we actually really have great climate conditions. So, there's so many things that go towards the benefits, speaking towards various building materials and stuff like that, of course. And when we're looking now in terms of the changes with the environment and being a bit more sustainable and things, all of this speaks to supporting the whole argument for why I think people should really consider it, as well as if there are any other things that we need to speak to the relevant authorities that approve certain things, to really just, start to look into all of these prefabricated structures, whether it's aluminium frames and glass and all of these things. It also then would help in terms of appreciating probably alternative ways which are cheaper in terms of construction. So they definitely, I'm all for it, and I want to come and visit your offices now tonight just to see your guys' space.
Thank you.
You'll be blown away. You will love them.
We're both coming. We're both coming. Thank you, ladies. So I'm going to just do one last question. I'm going to direct this to Molly about how long the building process took. And then may I ask that Tendai and Karen please respond to these two questions in the chat. One is about the average timeline for acquiring a diaspora loan for most banks, considering you've submitted all paperwork. And then there was a question on how straightforward is the process of applying for subdivision of residential land? What does it entail, and are there specific laws to be adhered to? So please respond to those in the chat. Molly, please tell us how long the process took you. And then I'll come back to Karen and Tendai for you to give me your final words, closing remarks, lightning round of closing remarks. And then we'll close the call right at 6:30. But we do have another experience to share. One of our USUP students, I'm calling him a student. I'm calling him a student because I was his senior in high school, but he also, he couldn't join us today, but he bought a house, like outright purchase of a property in Sentosa, and he's currently using it. He doesn't live in Zimbabwe. He's currently using it as an Airbnb situation. So we wanted to also get that in. He sent a video. The video is about 12 minutes long. So after we close, for those who want to stay and hear that experience of outright purchase of a property in US dollars, we will play that video. We'll be here, and then that's at 6:30. So Molly, please tell us how long it took you to go through the process.
So I'm still at it, but generally, like, building the house from foundation up to roof level took me about 5 months because I had the money. Then lockdown started happening, so it's still kind of like on and off. Sometimes you're told we can't go to the site. Sometimes they're there. So this is what, 1 year later, I'm still at it. So hopefully by the end of the year I'll be done.
Thank you. And of course, COVID has, slowed down everything, right? So, yeah, everything takes longer, but also COVID has slowed down a lot of things. Final comment. Karen, I see you're already on. You've unmuted, so please go first. Then I'll come to Tendai.
Okay. Yeah, I'm just hoping that everybody is actually encouraged to invest in real estate and to really consider this as a wealth creation and generational wealth. We didn't really get into that part, but we definitely should at another point. But do not be too hesitant to come into investing in Zimbabwe. There are ways that you can mitigate some of the issues that a lot of people have raised. I know that there's a lot of fear with people who are in the diaspora, but there are people who are credible, whether it's agents and developers that are credible and that are registered, that you can trust, that you can do business with very well. So yeah, looking forward to another one of these sessions. It's been very informative, even for me. Thank you, Tendai, and thank you, Doreen, and everybody else who's been on the platform for your questions and the attendance.
Thank you, Karen. Tendi, you can go ahead.
My parting remarks, definitely property, investing in property, you cannot go wrong. You will store your value. You will be able to, you will have an asset that allows you to generate income into the future. However, like I said before, due diligence is extremely necessary. If you don't do the due diligence, you run the risk of losing that wealth that you're trying to protect, all in the flash, all in, you blink or you wake up the next morning and there's a new headline that says all those areas that don't have the proper authorization or regular authority will be demolished. So I would advise that do your due diligence on the developer, on the person selling to you, on the area, and just don't take whatever you're told by the developer or the person selling. Go to the relevant authorities, make sure that you get confirmations that all the paperwork that they've given you is legitimate. And especially for the subdivision permit, read through it, because there will be clauses in there that say, in order for this developer to give you title, they need to have done A, B, C, D. So you have to know what that A, B, C, D is. Usually it's then, when they present you with a certificate of compliance, it means that they have adhered to those conditions. But for some section or title, there might be no need for a compliance certificate. So you need to have read the permit to see that they have done everything that it says that they should do before they're able to transfer title to you. That's why you'll find many developers have sold properties just after getting the subdivision permit, but are unable to then transfer the land to the people they have sold to. Is because they have failed to meet the requirements that are stipulated in the permit. So do take care and read and do your due diligence, then you'll be fine.
Thank you so much, ladies. I learned a lot from you. I love your passion. I love your passion for what you're doing. Really representing Zimbabwe and women and all of the things. So I'm sure maybe we'll be invited back. We'll see for part 2 of this. But thank you so much. I think for me, really, and Karen, you started to say we are in the Generational Wealth series, right? So today we just kind of did a deep dive into real estate. And from what I remember of what we've covered so far, generational wealth is about legacy, about wealth that will outlive you, of a long-term nature, that is sustainable, and in some cases that can change the trajectory of generations to come. So I think real estate investments kind of tick most of those boxes, if not all. So thank you for that. And for me, really, what I've learned having moved back to Zimbabwe and done working on a few real estate investments myself, just study the thing that you want to invest in, whether it is the stock market, it's real estate. You can never prepare enough. So invest in yourself too, and study and just stay on top of information and learning and continuously learn. So thank you for teaching us today, Tendai, Karen, and Tsitsi. Thank you so much. So what next week in the Generational Wealth series is we're going to go into something that you can't see. From my friend earlier who said, we like things that we see. A house is something that we see. Next week, we're going to be talking about investing in the stock market. So if that's your cup of tea, or if you want to learn something, tune in next week, same time, which is 5 p.m. Zimbabwe time, and you'll learn something about the stock market. We are now going to play the video, like I mentioned. Thanks, Tendi. Thanks, Karen. If you're going to stick around, if you want to stick around, you may. We still have 53 participants on. So I think people maybe are interested in hearing what Munashe has to say. So I'm going to ask Farai, who has been so kind in assisting us today with our technology. And so kind with me earlier when I was like, oh my gosh, can you see me? Can you hear me? So thank you so much, Farai, and everybody who's been working in the background on this. Rungano, we see you, we love you, thank you. And we're going to now play the video from Mona.
Hi, Menashe here. I'm going to be talking briefly about my experience buying a house in Harare. By the way, it's not where I am right now. This is a different place in the US, actually. But I bought a house in 2020 in March. I had been searching prior to that, about 6 months prior to that. I actually started my search while I was still here in the US. That's when I decided that I wanted to buy property for various reasons, actually. Part of which had to do with investing in Zimbabwe and really just setting up a base there so that I could have somewhere to stay when I visited. Also, I'd been thinking about doing work there, so it made a lot of sense to again set up a base there. So I started my search online, looked at a few properties, which gave me an idea of what might work for me. So in fact, I actually had somebody who was on the ground, somebody who was in Harare, go and view these properties on my behalf. They would take pictures and send them to me, and would talk about what they thought about the place, and whether or not they whether or not this was a good candidate. Through that process, I actually settled on one property that I was actually going to buy. Unfortunately, or maybe fortunately actually, the sellers didn't have deeds. They lost them. And if anybody has tried to get deeds, it takes a long time. You have to publish an ad in the newspaper and wait. So they started to do this process. They had to do it anyway. They started to do the process. But while they were doing it, I went to Zimbabwe on a planned visit. And I ended up viewing not only that place, but several other places, which got me thinking about my search criteria and really the sort of place that would work for me. I ended up changing my mind on what I wanted. I'd been previously looking for an apartment or a townhouse, but I decided, you know what, a standalone house would make more sense. It would allow me to make changes to the structure without requiring, for instance, the approval of the community. If in the case of a townhouse that is co-joined to other units, for instance, you need to get permission from. You can't just up and change the structure without the permission of your neighbors. Anyway, I abandoned this property that I'd initially decided I wanted to buy and started to look for a bigger space, a house with land. Once I had a new criteria, I settled on another property that barely met my conditions. The structure was in an okay shape. The land was there. It was about an acre, and it was not too far away from the places that I wanted to be close to. We actually started to go through the process of drafting an agreement when I found out that this property was actually owned by an LLC. The owners were in LLC. They were brothers. They had rolled the property under an LLC, and so they were actually trying to sell me the LLC rather than the property itself. and this is something that for those of you who might be trying to buy property, you have to be on the lookout for this. You don't ever want to buy an LLC, because an LLC, in a sense, is like a person. If the LLC conducted business in the past and incurred debts and liabilities, that means that you, as new owner of that corporation, will be liable in the future for some of these debts and liabilities. You know, somebody might come out of the woodwork and say that, oh, you know, this corporation, they owe me this much for this. Or, you know, a person could actually come out of the woodwork and sue the corporation, and then, you know, the owner of the corporation or the, you know, would be liable. You have to defend yourself. It's unlike a property which cannot be sued. You can't sue a property. So if you buy the property, it's now yours. If the previous owner is being sued for some other reason, it's not the property that has been sued, it's the owner. So, you know, it's a very important, something that is really important to know. There are reasons, tax related reasons why somebody might roll a house under an LLC. It has to do with capital gains, I believe. You pay less tax when you sell the property. Anyway, it comes with its own set of complexities. So with this property that was owned by an LLC, I asked the sellers to actually sell me the property instead. At the point we were going to actually sign the agreement, after the agreement was drafted, I was just browsing online for properties, as one does, and I came across another property that met my criteria squarely. So I actually delayed signing the agreement with this property that had been unrolled from under the LLC, and went to see this new property that I'd seen online. I fell in love with this property as soon as I saw it, and I decided I wanted to buy it. So I had to tell the other folks that you know, I wasn't going to go through with the signing anymore. But you know, that sort of thing happens, and this is not like it's not the sort of place where you have to be shy about it. It's your money. You want to make the best decision for yourself, and the sellers, the other party, they will do the same. So never be shy about changing your mind, especially before you've signed the actual papers, because there's nothing binding at that point. So anyway, I ended up buying this property. And for transparency, I think it's really important to talk about the figures, especially since we're talking about building wealth. This was 1 acre of land, a 2-bedroom house, not very big. There was a separate structure also on this piece of land. It's like it was the staff quarters, and it cost the asking price, which that's what I bid, because there were other viewers who came to see this property, and I don't want to be outbidded by this people. So I bid the asking price, which was 115K. So for reference, just in case you need an idea of what something like that would cost, and I'm happy to provide more information if anybody's interested. But I'm going to quickly talk about some of the things that I think you should be on. And first and most importantly is contested ownership. They are properties, for instance, that have come from a deceased estate. If, say, somebody dies and the estate, including their house, is inherited by more than one children, if there's a dispute about this inheritance between these children, but one of them continues regardless to sell the property to you, this might actually land you in a lot of trouble, because the other sibling that there's a sibling who inherited this property might actually sue to get this property back, and you don't want that trouble. So, you want to be careful. I particularly try to, I avoided all, properties. If a property had contested ownership, I wasn't, I was not considering it. Then the other thing is you want to verify the deeds. You want to make sure that, the people who are claiming to own this property actually do own it. And you can verify deeds at the deeds office in Harare. You can go yourself. You just ask to see the deed, and they will show you. It's it's not the most elegant process. It's a piece of paper that they actually have to show you, and they might not be the most willing to do. You can do it. It doesn't take a lot of effort. You just have to be very patient. All right. Then the other thing is you should only work with registered real estate agents. And there's a list of them online. There's a list somewhere of all the registered real estate agents in Zimbabwe. The reason is that these agents are regulated, and that they're agents. So that if you verify them, make sure that they actually listed agents, then you reduce the chances of actually getting scammed. Which leads me into the next point, which is that be careful of scams. There are people who are trying to sell property which they don't own, or sell property to multiple people. Just make sure that everything is above board. And then lastly, view properties in person. I know that it's not always possible, but whenever you can, try to go and see these properties and see the neighborhood in which they're located. Just you get a good picture of what you're really buying, because you're not really just buying the land or the structures on the land. You're buying into the community, so you want to make sure that you know what you're buying into. All right, I'm going to end there. If anybody has questions for me, I will be happy to answer them. Just reach out to me. I'm going to leave the host with my email address. All right, thank you.
All right. That's it. That's it on the video from Munashe, which I think was wonderful because it brought in some new areas that we may not have covered. The idea of a property that is under an LLC, the idea of deceased estates, the idea of registration of real estate agents, all of the above. So those are critical things as well. So grateful for Munashe. He didn't mention in the video, but I assume he lost his deposit. He didn't go through with the previous sales agreement. I don't think he had, maybe I missed that, but perhaps. His name is Munashe Shumba. You can reach out to him on Facebook. I'm sure he can answer specific questions that way. Munashe Shumba, and I'll put his email address in the chat as well. All right, thank you everyone. If anybody's here, music, please, Farai, and let's see you. Let's see who's around. Please switch on your videos and say hi. Please switch on your videos and say hi. Hi,
Hi, Madam
Rungano,
Chair. Hi, everybody. Thank you so much. Say hi to Doreen.
Farai.
Thank you. It was interesting.
Mama, happy birthday.
She says happy
Thank
birthday.
You.
Can you hear that?
Yes, I can hear Mama. Thank you so much. So good to see her. We have Auntie Sarita Chitapa. She was also saying something. Hello.
Hi, how are you? Thank you.
Very good. Kuri nani kukutonora.
I know.
Thank you so much for joining. Farai, that's a Dorothy Masuka song, please. DJ. Thank you, everyone. Who else is here? Please, let's see you. Let's see you, people. Noma Gugu, Eunice, Contessa. think most people have left. Fine. Thank you so much. This was really good. Getty.
Hi.
I was just calling on you. Hi, Getty. Good to
Hi.
see
Sorry,
you.
I'm at work. So I just joined from work.
Oh, hi, Getty. It's so good to see you.
Hi, bro. Good to see you too.
Ah,
I know. All right. Bye.
Thank you for joining, Getty. Good to see you.
Oh, good to see. Is this recorded such that like I joined late? So can we go back to the recordings? Okay.
Yes, you can. And the Education Matters Facebook page, as well as the YouTube channel.
Okay. Okay. Cool.
Yeah.
Thank you.
I'll send them to you, the links to you, Getty,
All right. Bye.
as well.
Okay.
Georgia, my mom said, "Wakaro Wakwamtare," but you never come to visit me.
And Rukuya Asia. No, I need to Jagadzirisa mama.
Welcome to All Tech Lansing.
Jagadzirisa mama. Fadi, are you still there? Good morning. I was calling Fadi, and there she is.
I am I'm babysitter, housekeeper, everything in one this whole month.
All of the above. Thanks for joining, Fadi. Good to see you.
No worries.
Thanks
It was a
for
lot of fun.
engaging.
It was a lot of fun.
Maybe,
And
yeah, you have some questions that I think may not have been answered thoroughly, but I can give you number, Karen and Candy, both of them actually.